All right. Good afternoon, or good evening, or good morning, wherever you might be. It's late morning for me on the West Coast. My name is Scott St. Clair. I will be your host of the weekly take on the market. Today is Friday, September 19th. Here is my profile. Here is the disclaimer. Please take a moment to read this. I'm not licensed. I can't tell you what to buy, what to sell, what to hold, how many shares you should own, whether you should own through earnings, etc., trade options, crypto. I could go on and on. All right, so we'll go through the market indices. We will do good trade, bad trade, and stocks to watch, and then the quote of the week. Pretty much try to stay the course of the deck that I have. Um, so sentiment, for whatever it's worth. I don't know if it's worth a whole lot, but I find it a bit fascinating. At least the bulls finally caught up a little bit with the strength in the market, but you still have more bears than bulls. Very fascinating period of time. A lot of skeptics on the market. Sometimes I find myself skeptical of it as well, but that's what makes a bull market go up. It seems once the last skeptic is in, then there's kind of you've exhausted all the buying power, and then it doesn't quite work exactly like that, but you get the idea. So people are somewhat skeptical of the market, and that's I guess on the simplest way, if you believe in sentiment, that's why it's gone up. They've lost a little bit of that skepticism in the last week. Here it went from 28% to 41%. And you had the Fed cut rates, which maybe contributed to that. So we'll have to wait and see. All right, I as a contrarian by heart, and just kind of like a history observer of markets. I just cannot stand to see something like this. But S&P 500 rallies the highs, and the White House tells you not to panic or don't be. I don't know what panicking means. I guess I know what it means, but I had never heard that term before. Um, but these usually don't end well when you see stuff like this. But it doesn't mean it has to end today, right? But my spidey sense tells me it just doesn't end well when you see stuff like this. But it's been an incredible bull market. This has been quite the year. If you've been open and flexible to it, there's been so many big winners this year. Whether you have to have earnings and sales, you've got the Robinhoods and the Nvidias of the world, and the Palantirs, or if you're willing to speculate a little bit more, you've got the Oklos. I mean, I think Oklos up. I'll pull up that chart today, and gosh, it might be up 500% this year alone. It's just incredible. Gold has done incredibly well. So if you're afraid you could have been in gold stocks and had an incredible year, I think the gold mining index, the miners, is maybe doubled this year, so maybe 100%, something like that. Energy stocks outside of oil and gas. Oil and gas have been a turkey. Chinese stocks have come on of late. What else? It's just been so many. Quantum stocks are going bananas as we sit here, and it doesn't mean you're going to capture all of them, but it's nice when there's just so many opportunities out there, because hopefully you can stumble upon one and capture it pretty well. Um, on IBD Live, Mike Webster talked about the 1980 precedent. I don't use precedents. This is my 2 cents on precedents. I think they can get you into more trouble than they can help you, because if you get a precedent and then you get married to that precedent and then it breaks, are you going to react quickly enough? Now, Mike says if the precedent breaks, they break all the time. So if it breaks, you got to heed the warning. So then I'm not sure where the value of a precedent is, right? If you're not going to follow it, right? So having a precedent means I'm going to follow this exactly as is, I guess, until it changes. But anyways, you take it for what it's worth. I just find it. I like to take in all information. I'm not saying I have all the answers. In fact, I have very few answers. I struggle with the market every day trying to figure it out. how should I be positioned? I sold that one too soon. I kept that one too long. It's a gigantic psychological battle every day, every week, every month, every year. That's kind of what's appealing about it. But here is the 1980 precedent that Mike talked about, the overlay. And so if it were to follow this, then you might get some type of correction base building period approaching. So let's pull up the indexes. All right. Let me turn off my camera so you can see. And I think I'm going to sneeze. I apologize. I'm a little bit under the weather. So if there's a muted period as I go through this video, that's the reason. Okay, so you should see a chart of the S&P, and just full steam ahead. It'll end when it ends. Maybe you've got your kind of upper channel line, but you still got a little bit of room for that. Get this lower channel line where you could, and I think it looks like this to me is like better. This is how I would use this. I like this type of thing better than a precedent, just the way I would. So I'm going to be, as we approach that line, I'm going to be less bullish. I don't know if I want to be bearish. I don't want to short it. And as we approach this line, I might be looking to add stuff, but with the caveat that if I do and it breaks that line, then I need to switch. Kind of like what Mike talks about when a precedent breaks, you need to really switch. So if it broke that line, that would switch me from being long to, if I felt like it, I don't know, we'll have to wait and see, but being short. So it's a bull market. I don't know what else to say about it. It's pretty simple. All right, let's go to the NASDAQ. Same, it's a bull market, maybe a little bit more up. So you're really getting very close to that. Now, and I would like to see that 1980 precedent play out. I'd love to get a pullback in the market or just sideways action. And that's just from a personal selfish standpoint. It's how I trade. I prefer to sell into strength, buy after consolidations. And so I've done some selling into strength, but I'm not getting the other part to come back. So I'm not super invested in the market as we sit here. What else is out there? Gold. Let's look at gold. Holding the breakout. It's been an amazing year in gold. Bitcoin. So I really think Bitcoin is the canary in the coal mine. And so, and Ethereum, for example. So these would be, I don't know for sure, but if the market loses its animal spirits, I think these will be the first to go. So I would keep an eye on these. It's just for potential market signals. And they're not doing a whole lot today. They are down, but not broken or done anything like that, obviously. All right, so that's it with the indexes. I think it's the bull market until otherwise noted. There are some stretch stocks, but there's pockets of climactic activity. It seems like Oklo looks very climactic to me, and I don't know about the quantum stocks because they're just coming out of a long base, so it might be too soon to be climactic. But Oklo's run from 10 to 130, and it's up 20 some percent today, so we'll look at that one. That looks climactic to me. A Labs made a big move, so maybe we could get some type of pullback, but we'll have to see. All right, so I think the good trade, bad trade I wanted to do was Oklo on January 3rd of this year. And it's going to serve the purpose of good trade, bad trade by itself, because it was a good trade that's turned into a bad trade because of all the money I've left on the table. So January 3rd, let's change the date. So I actually was buying Oklo down here, and I actually bought it here because I don't know. I wish I had Oops, I think my screen is paused. Bear with me here. Okay, so I was buying Oklo down here, and I was in it on this day, and then had to get out that day. That was brutal, brutal day. But I really was kind of sold on the whole narrative of nuclear energy, so it'd been on my radar for a long time. So when it finally started to go, I started buying it here. But again, the way I do it, I'm going to sell into that because I want to avoid this chop because I'm no good at this chop. One, I'm no good at it. Two, because I'm using size. If I have 25% of my account and the stock goes down 40%, that's a lot. It's roughly what, 11% down, 10% down. So now maybe I could keep a 5% position or something, and so that's food for thought. But when you're using size, you just don't know. I just don't know how you could sit through a 39% base. I can't. I just don't way. I don't want to either because it's draining mentally when you're trying to hold on to something that's going against you day by day by day. So I try to remain zen-like all day and patient, and I don't want to be staring at the stocks. So I want to have size, but not too much size. It's a fine line for sure. But so here's the day on January 3rd. This is the buy. Look at the stock breaks that trend line. It's up 25%. Now, this is a different 25%, right? Today it's up 25% roughly, but it's gone on this massive run. This is 25% and it's still in a 45-day base. So that's much different. This is real power, amazing power. You want to participate in that if you're interested in something like this. Now, if you say no earnings, no sales, no thank you, no problem. You just pass, you just move on, you don't have to worry about it. But then the stock gets going and it gets really, really volatile. You see how like it's up 25%, then the very next day it's up 10%, then the next day it's only down 1%, but it was higher. Following day it's down 12%. And so it becomes really, really difficult. And I don't remember exactly how I took how I did in this trade. It probably just became like a scratch because I would have sold a little bit into this. And when I went into my history, I had so many trades. One of the problems nowadays is when you put an order in for 2,000 shares, you might get 17 trades, and because of the way it gets filled. So the bottom line is it turned out to be a nothing burger, unfortunately, because of the way it got really volatile. And then that influenced me going forward with the stock. And so I was much quicker, even for someone like me, to take profits. So I'm buying again here and adding there. And so when it starts to go, it's up 43% in about 3 days. I'm a seller. I'm just going to sell it. I just have to sell that. Because if you have 10% of your account and you make 40%, you move the whole account 4%. That's a big move. So you see how it went crazy, and then it gapped down. Like I can't recall like why, but see, now I'm glad I'm out. And so this will influence you as you go along the way. So I've had the weird trade here. And then this turned out to be a really good trade, and I was rewarded for selling into the strength because I avoided this really bad day down 25%. I can't remember why I did that. But then the stock rights itself, which should be a clue to me that something really strong is happening here. And you can see how the stock just starts going and going, and now it's going without me. And that's frustrating, but I have to admit, I never would have been able to survive that move down. So you can see how it's so difficult, like in a what's the right way to say this? In a vacuum, stock went, first buy was at 11, stock's 50. You were never underwater, Scott. Why would you ever sell? Well, that's fine if you have 100 shares or something, but when you have X amount of shares across a number of accounts, you have to understand it's not that easy. The stock's down 39% here, it's down 17% there, it's down 35% there. and you're almost manic depressive because of the way the stock is throwing you around like a rag doll. So I missed the rest of this move. Turned out to be a really big move, and then the stock just gives up the ghost again. It gives it all back, down 50%, down 50%. So let's fast forward to the next time I'm back in the stock and exploring it. Is this kind of really quasi cup with handle, and the stock gaps up here. And so now I'm back in play and buying the stock here. And you can see how it got really difficult. 58 down to 45. It's a long way down. It's hard for me to hold that. Somehow I was able to survive, but then again, I'm because I have ridden this down, I'm selling that day. And this is where the kind of whole good trade, bad trade turned into a good trade, made good money in the stock, but it just left so much on the table because it's really the beginning of a big move. But wait, I would never have been able to survive this. So this is a good exercise just to clear your head and kind of, for lack of a better term, like forgive yourself. I don't want to go down the psychology path, but you really you have to kind of, if you start worrying so much about all the stocks that you had and where they are now and the Nvidias and the Apples and the Googles of the world, you're just going to take yourself out of the game going forward. So you have to learn to forgive yourself for the mistakes you made and just try to press forward. Right? In football, they'll say next play, right? You give up a 60-yard touchdown. Well, you still got to go back out there the next play and try to stop them from the next time, right? And so it's just the next play. I'm always trying to think about, okay, well, let's move on. What's the next one? What's the next one? And so here we are with this stock just exploding higher, right? But it's like I have some friends that ask me like, boy, that Oklo you gave me, Scott's incredible. It's gone from, when I say gave you, I mean a lot of times people will ask me, what you're doing, and I'll tell them with the caveat that doesn't mean I'm always in it. But it's gone from 11 to 130. It's up tenfold. But for me, it's just not possible to participate the whole way because of the way that it got there. So, but as we sit here now, this is super climactic. Now, if you're in Oklo, great, you're doing amazing. But and can it go higher? For sure. This is the hard part about climax tops is today the top, or Monday that maybe it opens at 140 on Monday, maybe it opens at 180 on Monday, but the way that it's going, it's very climactic. I mean, it's here, you're down here at 66, now you're at 130, so it's almost doubled in a handful of days. It's got a lot of the characteristics of a climax top. All right, so stocks to watch. Oklo, LEU has been a really good one breaking out of this cup. This was one that I've participated in as well, trying to capture the whole nuclear theme, UUU. And they're just kind of gone at this point. If you're not in them now, you've missed them for now. Can there be another leg? Possibly. I don't think so. Is my 2 cents. I feel like this is the leg. You went from nobody wants nuclear, now it's like okay, and the government's actively pursuing it. Like there's a talk of a uranium SPR, strategic reserve. I don't know if you call it SPR because of the petroleum word, but would you call it an SUR? So I feel like it's a little late in the game, and if you're in them, I would be trimming for sure, for sure. Let's look at some of the big boys like NVIDIA. That's building a flat base. Very cool. So now if you're not NVIDIA, you got a chance you get a new buy point. That's good. I didn't even realize that till just now. It's kind of cool. What about like A-Lab? So it had some kind of cautious comments that today I think I saw from somebody at one of the brokerage houses about the deal between Nvidia and Intel and how it might affect A-Lab, but holding up pretty well considering. Now, this is a little bit climactic, but it's just coming out, right? So it's only one, two, three, four, five, six, about 8 weeks into the breakout. Now, if you count this as the breakout, you're 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks into it. So it just kind of depends on how you do that. So it's a little bit closer, but doesn't quite qualify as far as the length of time. Now, in this day and age, everything happens so much faster. So the cups with handles are harder to see and harder to set up because it's harder for the market to go sideways for long periods of time. So if we were to update the how to make money in stocks, first, I don't know if anyone would want to have that on their plate, but my curiosity would be like, I wonder if we would shorten the parameters for all of the bases. In other words, if it has to be 7 weeks for a cup with handle, maybe 5 weeks is long enough based on the way information disseminates so much faster nowadays. Food for thought. I don't have the answer, but I think about stuff like that. The quantum stocks. So very good breakout, acting great. I don't know what to make of this. They announced IONQ announced an MOU. And what was an MOU? A memorandum of understanding. And what that means is we're going to work with the space program or NASA to pursue quantum in space. And we have an understanding with them. There's no contract. There's no revenue. There's no money changing hands. There's nothing. It's just like almost like a handshake agreement. I had never heard of MOUs before until this, and it very much reminds me of the old eyeballs days and the internet days where instead of reporting earnings and sales, XYZ Lycos search engine would report eyeballs. So we had 10 million eyeballs last quarter. Now we have this quarter we project 50 million eyeballs, and the stocks would roar on the news. And so my spidey sense again tells me this ends in tears. But it's too early. It's too early, and honestly, it's cost me money because this is a really good breakout that I would have probably participated in if I wasn't so skeptical on the whole area. What's the other one? QUBT? Is it that one or QBTS? Yeah. See, I would breaking out of this kind of trend line. I did it. I bought it. I can't remember if it was this one or this one that I was in. I think it was this one, the second one. And then I was in this one as well, but I went down the rabbit hole of trying to learn about quantum and kind of scared me out. And now I'm not in that one. So these stocks are roaring. That's what I'm saying. There's so many money making possibilities out there this year. It's been pretty crazy. Oracle. So it breaks out, gaps up on a revenue projections out till a long way away. Probably needs a bit of time, but again, these are the names that are moving, and there's just a lot of possibilities have existed in this market. Let me think of. Let's look at like I think I sort of looked at crypto already. Chinese stocks. My focus has been on BABA. This has been in this rally period here so far. I can't think if there's something maybe I took off already, but this has been one that I've held fairly well. I'm not great at it, but trying to get better. But I've held it fairly well, and this has been my best position in this time period that we've gone through. I still am in it. I feel like it's probably going to go sideways, and maybe there's a shakeout somewhere, but I've thought that a few times and then got out too soon, like Bloom Energy. Oh, this is another one. It's just an incredible mover that I was able to survive. Was it here? Was this the earnings shakeout? Yeah. So I was buying that stock that day on the earnings shakeout, and that's in the 30s, and here we are in the 80s. So I'm trying to, right or wrong, give Baba some room to breathe. Let's see. Let's see if it works, and two, if it does work, do I survive it? NBIS. This looks very viable. I'm very tempted, but it's hard because I was buying this stock down here. So that looks very interesting to me, acting well. It might be on Swing Trader, maybe, or Leaderboard, one of those services, maybe. And what else is out there that that's appealing to me? Oh, Tesla. And again, this is just sometimes you just keep it simple. Like, what's the stock telling you versus what you think? All right. Sometimes thinking is my own worst enemy. I just can't bring myself to be a buyer of Tesla. But this is a huge breakout, big liquid stock. You could get size. You have a liquidity because it's Tesla. And I saw on Twitter a few people that I follow that, they've knocked out of the park with this one. So sometimes it's better just let the charts tell you where they're going. I think that's it for now. I think the message is clear as far as the market. It's stretched as we sit here. I do see some emails and some stuff come in to IBD Live like, oh, how do I add to Oklo, or how do I add to Bloom Energy? And you really can't correctly. You can add if you just can't help yourself. I'd say if you have 1,000 shares, you're just dying to add. Buy 100 shares just to appease yourself, just to scratch that itch, so to speak. But correctly, the way you should do it, there are no places to add to these stocks. They're super duper extended, all of them. ALAB, BE, Oklo. Now Palantir, so this is how you add, right? See that shakeout down to the 50-day and closed above it? So you try to shake out again. That's how you add. You don't add just sticking straight up in the air. When you add sticking straight up in the air, you usually get burned, and then you get frustrated. It's like, I can't make money in the stock market. How come? I'm buying all the right stocks. Well, you're buying them wrong. Let's be blunt. Go back and study. Look at where you're buying, where you're selling. You'll find that you're probably buying them wrong, or you're probably adding to them wrong. That's probably really what's happening. Hood, another great leader, right? Do you buy it sticking straight up in the air here? I don't think so. Did you buy the shakeout here? Did you buy the shakeout there? Right? That's how you buy it. That's how you buy it. I'm not saying it's hard, but go back. Where was the quote? I'm sorry. I'm not saying it's easy, but where was the quote that I talked about? I think maybe last week or 2 weeks ago. Being uncomfortable. It's uncomfortable to buy Hood right here. It's comfortable to buy it there. And Oklo, everybody wants to buy Oklo here. It feels so good. If you bought it at 125, it's already 131. If you bought it today at 125 incorrectly, so to speak, it's already 131. That feels good. They want to do that. That's why it's sticking straight up in the air. That's why it's having an impossible time of pulling back. Fast forward a day or 5 or 10, I just think this stock's going to be lower than that. It's going to do something and do this, like what it did that one time when I went through that one day where it just all of a sudden just gapped down. I can't even see that anymore here. I think it was here, yeah. And you're going to get shaken out, and you're going to wonder what happened. I think that's how that plays out. We'll have to wait and see. Let's see how it does it. All right, so let's jump to the quote of the week. Mike Taylor, I stumbled upon an interview with him. He runs an ETF as well, and I guess he does run a hedge fund as well, or he's a former hedge fund manager. But he was talking about position sizing and concentration, and it really resonated with me because it's exactly what I think about, and my how I'm trying to do it, because I think maybe honestly, maybe I have too much concentration, so I can't hold these longer. So I'm trying to figure out what the right number is. I don't know what it is. I just don't. It's hard. I go back and forth. I'm always ebbing and flowing, and it's probably the right number is probably different for the stock. So like an Oklo, maybe a 5, 6, 7% position is the right number. Whereas for an NVIDIA, it might be a 25% position because of the quality of the company, institutional sponsorship, the size, the liquidity. Tesla could be a 25%. Baba, barring the Chinese thing, if you're worried about China, but I often have a position in that range. It's big, it's liquid, it does trade overseas, but now you have this whole 24-hour thing with Thinkorswim. And I don't know if you could put a stop. I don't think they allow that, but I could literally wake up at 1 a.m. and buy or sell Baba if I had to. I don't want to do that, but if I truly had to, I could. So on concentration, he says, when you got the nuts, you got to go big. That's it. Now, I hemmed and hawed about using this quote because of that phrase. But what he's saying, if you play poker, you know what the nuts are. It's the best possible hand. If you don't play poker, that's the phrase that they use. Like if the board was 3, 4, 5, 6, 7, all a rainbow, all different colors, and I had 8, 9 in my hand, I would have the nuts. There are no other hands possible out there that beat you. And so like if I, bet and somebody called me, I would turn over my hand and often would say, I have the nuts, right? And that means I won. You can't beat me no matter what. Maybe you could tie, but you can't beat me. So I think what he's saying here is when you have the best possible hand, you got to go big. When you see something that is something the street doesn't understand, you don't have to go big then at that moment. Another key phrase. So the Oklo, I had a lot of size at 10, 11, 12, 13 down there. And that was wrong based on this phrase. I was early. I saw something that the street didn't see, right or wrong. I kind of saw this playing out the way it did. Maybe I got lucky. Oh well, that can happen. You can get unlucky in the stock market. Why can't you get lucky as well? I'm okay with that. But you don't have to go big then at that moment. So I should have sized accordingly. You have to go big as soon as they start to figure out what you already know. So that was when the stock started to build a base, runs from 11 to 20, then builds a base, and then builds another big base. And that's the moment where you can really start to go big. You'll see it in the stock, he says, right? You start to those big, strong moves, like the stock gapped down and then it went back up 5 days in a row, back to new highs. If it gaps down 25%, it shouldn't go back to new highs in 3 or 4 days. That's very unusual. So you'll see it in the stock. Now, he runs an ETF, I think, called Pink, PNK is the ticker maybe. And, maybe in this hedge fund, but he talked about like having a 5% position in a name he had a lot of conviction in, a 4% position in a name he had a lot of conviction in. So on the street, those are big position sizing, right? If you look at Fidelity Contrafund or something, I think at one point he had like 15% in Meta, which is super unusual. Look at all the other funds like in the IBD Mutual Fund Index. They just don't have that kind of size. If 4, 5, 6% positions, those are real big conviction positions. Now, that's just probably, I don't want to say it's too little for me, but from when you're running your own money, I think you can go a little bit stronger than that. That's my 2 cents. So I think the right position is somewhere between 5 being too low. Anything below 5, probably too low. It doesn't move the needle if you get it right. That's why it's too low. It might feel good to have 5% of 3% of your money in XYZ, and it doubles. But if it doubles, you only moved your account 3%. You want to move the needle a little bit more. But if you have 25% and it doubles, great. You moved your account 25%. But guess what? You're probably not going to be able to survive the whole move for a double with 25% position. So the right answer is probably somewhere between 5 and 25. And there's you could drive a truck through that number, and it's probably different for different securities. Honestly, I think the traditional way with Bill in the book is it didn't matter XYZ ABC DEF. You just had the same position for all of them because you never knew which was going to be your big winner. Uh, that makes it easier to handle, like just to enter and create positions. But my 2 cents is I think depending on the size, the liquidity, your conviction in the name, does it trade overseas? If it's Chinese, you might say, oh, I really want to own it, but I just don't want to have a 25% position in a name like that. I get it. You have to be you have to be able to follow your rules. You have a set of rules, but you got to be able to follow them. So if you can't follow them, it doesn't do you any good to have a set of rules if your emotions are going to override you in that very moment when you need those rules the most. All right. I appreciate it. Thank you guys. I think I am out next week. Because Take on the Market with Arnie and Harold is next week. So no video next Friday unless something drastic happens, and I'll step in and do something. But otherwise, no video. And I will see you in October, I guess. 800-831-2525, Market Surge at investors.com. Thanks a lot. Bye-bye.